With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday. I'm Juliette Sarli. Of course, a lot of concerns once again about so-called Liberation Day looming down on us, and we have seen a negative session today on the local market as some of that trepidation eased into market sentiment. You can see there the CBO 200 ending the session down by around 1/3%. The ASX 200 off by about 0.4% as we head into the close, with weakness in particular from the tech players, the REITs, the telcos, the consumer discretionary stocks as well. So that really just brings us to, I guess, the main themes of the day, and back in the red is where we are as we snap that winning streak that we had coming through on the market. We're also talking about the Accept shop, this Dollarama bid for the Reject shop. Certainly be nice if you bought into that yesterday, doubling your money on the Reject shop. Of course, a lot of M&A flutter happening recently, but this does seem to be a bid that has certainly projected that stock high. We'll talk about it with our guest Henry Jennings coming up shortly. And speculation, well, of course, we know it's happening. It has to be called soon, but the election, the federal election, may be called as early as tomorrow by the Prime Minister. We had the federal budget on Tuesday. Tonight, we get opposition leader Peter Dutton's right of reply. Let's have a look in terms of what we've been seeing with sectoral moves and some good gains coming through in the energy space, offsetting a lot of the weakness elsewhere. Woodside Energy up 1% today, and the overall energy sector higher by around 0.9%. Great chat with Zoran Kresovic earlier today on the technicals and what they're showing us about where crude is. He's still saying it is a key 2025 trade. Having a look at the tech check as we saw weakness coming through in those tech players. NextDC, the lagger, they're off by 6%. And the financial sector also under pressure to the tune of around 0.6%. If we have a look at where the banks are tracking as we close, CBA down 0.6%, $149.56. Westpac, though, bucking the trend, up by some 0.8%. Well, in corporate news, Brambles announcing the allocation of a €500 million European green bond maturing in 2033. The Westfield operator Unibel also finishing its placement for €815 million in hybrid notes. It was a little weaker. Helios, though, was a front runner. It's going to distribute a special fully franked dividend of 41.3 cents per share, sending its shares higher by 11%. And then we touched on the Reject shop with its very nice 111% pop today. The Canadian retailer Dollarama bidding to acquire the Reject shop at $6.68 per share. That is 112% more than where it closed yesterday. Domain, though, tracking lower. CoStar now offering $4.43 a share to acquire the business, higher to the last bid, but CoStar has flagged this was the best and final offer for Domain in the absence of a competing proposal. All right, let's get stock specific and talk about all the market action. Welcome to the COB. Henry Jennings from Marcus Today. Good to see you as always, Henry. So today, just more broadly, I guess that Trump tariff trepidation in the fore again.
Yeah, hi Juliet. I guess, you know, obviously the car tariffs were front and center in terms of that 25%, which sounds pretty horrible, really, but you know, it doesn't really affect our market. It's clearly had some impacts across Asia with the likes of Tokyo, Honda, etc. In Japan and in Korea as well. So that clearly does have some impacts. But what I thought was interesting was Trump was actually talking about going a little bit more lenient on Liberation Day than some had imagined. So that was, I guess, a kind of a slight positive for the market. We're only down around 29 points today, but I guess there's a few big stories around today. The Dollarama story is a big one, and for a retail chain that invites shoppers to save money, they haven't exactly done that in terms of the price they're paying for the Reject shop, because you know that is a massive premium, 112% premium to the closing price last night. I think they could probably save themselves a Dollarama or two by bidding slightly less. That does seem a very big price. So obviously the reject shop board has done a very good job. Everybody's falling over themselves to take the money, but the reject shop board has done an exceptional job in, I guess, getting top Dollarama for the stock. So that is interesting. The other one, of course, interesting today is Domain as well, with that bid coming in best and final as well, below where the shares were trading at. So that's caused a bit of an eruption today with some of those arbitrage boys bailing out because there's really nothing in it for them over a long period of time. There's still obviously FIRB as well and lots of other things to go through in terms of that bid. So it has been an interesting day. A little bit of selling in some of our car-related stocks, AP Eagers, ARB, I guess, and Batcore to some extent. Maybe it's more a sentiment thing on the back of some of those Asian car makers coming under some pressure. And then, of course, we've got the fallout as well, Juliet, that continues from the Opthea Phase 3 trial. Well, suboptimal is not really putting it in perspective, is it? The stock closed at 60 cents, is now being valued off market because it is in a trading halt at 20 cents. And we've seen Pengana suspend redemptions in one of their funds, which has some big exposure to Opthea and Regal Partners once again, which had 32% of this thing. Which you've got to say, Fund Management 101, diversification. that is a big bet, and a big bet that has gone spectacularly wrong, and the crown well and truly slipping from Mr. King. So yeah, it's been an interesting day, Juliet, to say the least.
It has, and yeah, Regal down, I think, another 9% today there, Henry. So as we look ahead to Liberation Day, we also had the budget this week. Not really too much in terms of stock momentum there, but we've got Peter Dutton's right of reply tonight. Anything that might be in that to move markets?
No, I think I'll watch Drive to Survive, to be honest, because I think that'll be far more interesting than Pete Dutton's right to reply. Obviously, they're going to focus on these, the petrol excise as their thing. But, it'd be nice to see some policies from both of the parties, but we're probably not going to get that. It looks as if the Prime Minister is going to call an election tomorrow, and it's going to be May the 3rd. It's a shame they can't call it tomorrow and have it on Saturday. Then we would save ourselves a lot of angst and a month of campaigning. But I'm sure the media companies will be delighted to see all those ads being paid for across the old school media. So that might give them a little bit of a boost. But yes, it's hardly inspiring out there politically at the moment, is it?
No. Well, it's got to give us something to talk about for the next month, though, doesn't it?
Well, there's that. Yeah.
All right, let's drill down into a couple of other stocks. You talked about so many of them, but Pro Medicus also, which I know is a stock that you've looked at a fair bit, down 7%. So I guess this is just a bit of selling after it's been such a big front runner on the market.
Yeah, I think a lot of people are looking at the real winners from 2024 and in the early part of 2025, and especially those high PE stocks and ones that do have, if we do see a re-rating in the market in terms of the PE multiples, especially in the US, which we're seeing at the moment, then, these kind of stocks are going to certainly be in danger. We've also seen some of the former high flyers like Goodman Group and NextDC coming under pressure as well. It appears Microsoft are walking back some of their ambitions in the data center space. So that is having a bit of an effect on them. Don't forget, Goodman Group raised $4 billion at, a much, much higher price than they currently are now. So, they were very pleased to raise that $4 billion, of course. Maybe they should maybe they should just keep it in their skyrocket for now and not spend it on data centers, because that doesn't seem to be quite the demand that maybe we had thought. Certainly there were some warnings yesterday from, I think, the Alibaba chairman came out and warned about a bubble in data center demand, and then couple that with Microsoft pulling back as well on their ambitions, maybe is a bit telling that we've got a little bit ahead of ourselves on this trade.
All right, well, as we, as I touched on, we look ahead to Liberation Day. I mean, so much money going into gold, Henry. Goldman Sachs upgrading their forecast to 3,500. Bank of America lifting theirs to 3,350, I think, for this year. So we just continue to pile into some of these smaller miners?
Well, I think the key here, I'm not sure the gold price is going to be quite as good as some of these guys think. It would be nice if it was, but I think what's important is that a lot of these smaller miners, a lot of these mid-cap miners and the big-cap miners, they're making off like bandits at the moment. Gold in Aussie dollar terms is over $4,700, and a lot of the all-in sustaining costs for these miners are $2.2 thousand bucks in terms of the AISC. So there's a lot of cash. I know my friend Richard Morrow's talking about $5 billion in cash swimming around the gold, and we are seeing certainly deals out there, M&A increasing. We've got Northern Star and De Grey, we've got Spartan and Ramelius, we've got the Goldfields, Gold Road going on at the moment as well. So there's going to be more M&A in this space because at the end of the day, these guys are making a lot of money and they've got to do something with it. And it's not really in their DNA, I guess, to return it to shareholders or pay special dividends, which is maybe what they should be doing. But I'm sure we're going to see a lot more M&A. And the gold miners have kind of been left behind a little bit. I know they've performed pretty well, but some of them have been a little bit left behind. And the market has been skeptical about increased production. It has been accompanied in the past by increased costs, which has really not benefited the gold miners at all. So I think there's still life in the old dog. I'm not sure we're going to get to 3,500. It would be really nice, but and everyone's long, which is always a bit of a concern in the gold price. And everyone's now talking copper as well. That plays into that copper theme that we're seeing with tariffs too, in terms of there's a race at the moment to get copper from elsewhere in the world to America before they slap a big tariff on copper, which is going to be interesting to see if those ships get there in time. So the race is a bit of a wacky race is going on there.
Indeed. All right, Henry, always good to chat. Thank you for your time today. Henry Jennings there, Marcus Today. All right, let's get back to some of stock specifics there. And the stock of the day was Helios. Zach Riaz from Banyan Tree Investment and Philip Pepe from Shaw and Partners spoke to Andrew.
They've done a lot of corporate restructuring, some forced, some by market condition. Look, more broadly, we've been following this company for a long time, and it's never attracted us. The medical business initially in the Bateman era, how they used to get GPs on, and the pathology business got some experience there. The way doctors write their pathology forms, they've got nuances in there as well, and then the whole cost inflation around putting pathology centres within GPs, it just never attracted us, and so we stayed away from it. Look, this 14% return is minuscule when you look at the 5-year return. The positive in today's result, or today's strategy day, is they want to take their medium-term EBIT margin from circa 2% now to mid to high single digits, like 2 to 6. That's a big increase, which will definitely improve their earnings if they can deliver that. But it requires the volume to come back. And unless we can address the perceived cost of going to a GP, I just don't see patient volumes going back above pre-COVID levels, which is what it may require for them to hit those targets.
Okay, let's have a look at the leaders on a down day, and we know Helios was among them, up by 11% there. Ramsay Health also had a positive session, along with Helia Group, Gold Road and AUB. To the downside today in the market, Pro Medicus, we touched on that. With Henry, some selling out of one of the stocks that has done incredibly well over 2024. Tech stocks under pressure as well. Zip, NextDC. Telix Pharmaceuticals was off almost 6% and Net Wealth fell 5.5%. In the small end of town today, of course, it was the reject shop, that Dollarama bid from Canada, very much propelling the reject shop, so doubling your money if you had that stock from yesterday. Consolidated Ops up 16%, Orion Minerals, St Barbara and Energy Transition to the downside in the small end of town. We had these players on your screen, including Unico Silver, which was down by 7.4%. Tonight, US GDP for the December quarter growth tipped to lift from 2.3 to 2.5%. We also get the weekly unemployment claims. They're expected to have edged higher over March at around 225,000. The US goods trade balance as well for February, where a deficit of $133.5 million US is expected, this according to CommBank economists. Tomorrow, Friday, we've got the Bank of Japan summary of opinions. Also some ex-div stocks locally, including Bravura, Centurial Industrial REITs and Dexus Industrial and Retail REIT. And don't forget, tomorrow as well is the last call. So we will join you at 3:30 p.m. with that. But just checking where the market is finishing the day's session, down 1/3% there on the CBO 200. The ASX 200 closing a neat 30 points lower, or 0.4%, 7,969 points. Yeah, so just to reiterate, tomorrow, last day of the month of the quarter, of course, expecting a fair bit of potential window dressing there too on the markets, but we'll be talking you through the last call. We've got a great panel coming along, including Harry Otley from CBA, Mark Todd from Bank of China. On the equity front, we've got Josh Gilbert from eToro, Grady Wolf as well joining us from Bell Direct. Plenty of guests, so please join us from 3:30 p.m. But before that, join us at 9:45 a.m. Eastern. Have a great evening.